Hi, my name is Damiano Karachi. I am the CEO of Spectrum Accounting Services. We're a full-service accounting firm located here in Boca Raton with offices throughout the United States. We offer our clients a full litany of services from tax preparation, bookkeeping, tax resolution, accounting, and CFO services. We're doing this show today to bring to you important business and tax-related items that are going to help you in the future as things change. Thank you, and I hope you enjoy the show. Robert, thank you for coming here today. I hope that my clients, this audience, get a good understanding of what cost segregation is and how to defer their taxes. You satisfy a bunch of my clients already. I have a few clients that are really happy with you. I know that the moment that they make a new acquisition, they're thinking, we have to call Robert before they even close on the building. So I have to stop them a little bit. And I apologize that I'm slowing you down. I hope we could, like I said, I hope we could assist more people today. Give us a brief description of what you do and what your company is, the name of your company.
Yeah, thanks, Damiano. It's good to be here. So our company is Cost Segregation Services, or CSSI Services. We've shortened it because we do more than just cost segregation. We also offer Section 179D for new buildings for energy. We do research and development tax credits. And we have an exciting patented product called Green Zip Tape for new construction over 10 million, which allows for the depreciation of internal walls at a very rapid pace. But today we're going to focus on cost segregation. Our firm is based out of Baton Rouge, Louisiana, but my practice is out of Florida. My office is out of Florida. I'm one of the national client advisors for Cost Segregation Services. And I have clients throughout the US, even as far as Alaska. So we're a national footprint firm, and we've been around for about 22 years. And we're very well established and known in the industry.
What is cost segregation?
That's a great question. Cost segregation is simple. Basically, what we do is we take a commercial building and we break it into components. And those components can be divided into personal property and real property. The personal property is allowed to be depreciated at a much faster rate than the real property. So if you have a commercial building that's being depreciated over 39 years and you get a straight line depreciation, an equal amount every year, we do what's called an engineered analysis or an engineered study on that building, breaking it into up to 100 components. And then we put those components into buckets. And depending on if it's in a 5-year bucket, a 7, 15, or 20, we can then accelerate that, squeeze it into year one. And with the new passing of the bill by Mr. Trump, we can now get 100% bonus depreciation, which means that all of those categories from 5 to 20 years can now be taken in year number one. So it's an accelerated depreciation. And that's what's called cost segregation. So you segregate the building into cost components, and then you squeeze that into year one. And what that does is it allows for a large deduction, income tax deduction in that year. And basically, it's a tax deferral strategy for real estate investors.
So going back to what you said, if I have a commercial property and I'm paying 2.5%, I can only depreciate 2.5%. So I bought a $1 million property, I'm only doing 2.5%. Now I could take, by breaking up
to 25 or 30%, depending on the type of property. So any property with a lot of internal components such as cabinetry, vinyl flooring, all the exterior components of landscape in the parking lot, even the stripes in the parking lot, we can take that at an accelerated pace and allow for that depreciation and income tax benefit to be taken in year number one rather than over a 39-year period.
What does that mean for the investor or the building owner or the investor in the property? What does that mean?
It means recapturing of his investment, reutilizing capital at a faster pace. So rather than, rather than them getting these deductions over time, they're getting the benefit today. So it keeps cash in the business. It keeps cash and allows that for either paying down of debt, purchasing new property, And it's just an incredible ROI calculation when they look at it. So it's a tremendous opportunity for real estate investors and anybody with a need to have a sort of an income tax deduction today.
So basically, what we're doing is we're speeding up the recapture of the money. We're increasing the cash flow
Correct.
on the front end
Yes.
of owning the property instead of at the back end.
Yeah, I'll put it simply. You do some work for a client, and you send out that invoice to your client. Say it's $5,000. Do you want to collect your money today or over 12 months or over 2 years?
I want it today.
Right. But you have lost revenue. If you collect it all today, you can't have that revenue tomorrow. It's really not a great argument, is it? So why would you want to spread your depreciation over 39 years and get deductions slower rather than you can get them today? It's just math, it's finance, and it makes sense on paper. If you have taxable income.
And it's not it's a paper expense.
Absolutely.
Depreciation
Yes.
is not an expense that will outlay in cash flow.
Correct.
So it's not that's costing us any money. Now, speaking of cost, what is the cost of doing this analysis, the CS analysis?
Well, typically, it depends. If it's a small Airbnb, say for $500,000 to $1 million, the cost could be $3,000 plus. If you're getting into a $5 million property, the cost could be $6,000 or $7,000. And if you get into a $25 million property, it could be as north as 10 or 12,000, 15,000, depending on the complexity of the work, the engineering work that needs to be done.
I would assume that a commercial building, the square foot of the building has some to do with the cost, but also the type of building. Is it commercial that's residential? Is it commercial that's office space? I guess.
And it all has to do with the amount of engineering work that's involved, the amount of, when we do a site visit, is it going to take us 1 hour to do the site visit, or is it going to take us 2 days? I recently did a massive property out west in Boca Raton, Florida, and that took me 2 days to do all the site visits and the pictures and the documentation. So, of course, there's a higher cost for that. There's the time of the engineers, there's the time of everybody. So it all depends. It's depends on the amount of work that's involved.
So you're saying pitches and engineers. So you need to document all the work that's getting done?
Absolutely. The IRS has certain requirements. Their preferred methodology for cost segregation is an engineered-based study, not a back of the napkin calculation. Some CPAs can do what's called a simple overview, but they don't capture the amount of detail that we capture in an engineered study. And that means we have to visit the site, we have to take pictures, we have to look at all the components of the building, we have to make notes, and we also look at floor plans when available, appraisals, and we collect that data and we spread that out, and then we go through it in detail, come up with final reports, which are then sent to the CPA for filing with the client's tax return.
Yeah, you lead into my next question. What does the owner have to do?
So basically, all I need from anyone, a property owner needing a cost segregation study, is the purchase date of the property, or the address really, what they paid for the property. Now, if it's in a prior year and they've already filed their taxes on that property, I'll ask the CPA or the owner to send me the depreciation schedule from the previous tax year, and we take the details off of that. Well, once we know the address of the property, the value of it, we can do a proposal. We prepare a proposal for the client, which is pretty accurate. It tells them the cost of the study. It gives them what they can expect. We give an accurate range of deductions or accelerated depreciation that we expect from this property. Now, remember, we have 22 years of data and history to go by, so we can give them pretty accurate information. And we're also conservative. We don't overpromise and underdeliver. If in fact we tend to underpromise, so that we don't set expectations beyond what we think is reasonable. We try to work with integrity and honesty, and we have a reputation to uphold.
On case of an audit,
Yeah.
are you offering any type of guarantees to the owners of the property?
That's an excellent question. Yes. So In our 22-year history, we can boast that we have never triggered an audit. We can also boast that we have had between 12 and 15 queries from the IRS, which we've answered and settled the questions from other reasons. Plus, if there is an audit, we will go to bat for our clients at no charge because we're so confident in the work that we do. It's by the book, according to IRS guidelines. And the other thing is the IRS is very familiar with our firm. And when they see a cost segregation study done by our firm, we have very high marks, which really helps. We can't say that for all cost segregation firms. There are many out there that are not so good, and there's some that are good. So we're not the only ones that are good, but we certainly think we're the best.
Well, I know you're the best because again, my clients speak raves about you.
Thank you.
What does the accountant have to do? What is me as an accountant? What do I have to do? But I have to give you the depreciation schedule.
Yeah.
If it was prior purchase building, but what else do I have to do?
We like to make the CPAs have the easy button.
Okay.
Okay, so we do all the heavy lifting.
So you have that Staples easy button?
Easy button.
Okay.
And all we like to do is to say to the CPA, send us a depreciation schedule, and we will do all the rest of the work. We prepare the reports, we send them to the CPA. All he or she has to do is to file those reports. If they have questions, we will answer the questions on those reports, and we make it super simple. Plus, if there's a need for a change of accounting, which is a 3115, CPAs out there will know what that is. That's if they have filed income taxes on this property in a previous tax year, which means they're on a straight line depreciation method, to go to a cost segregation or an accelerated depreciation schedule, you need to do a 3115 change of accounting form. We do that as well because CPAs don't particularly like doing them. They're tedious and they're a little expensive. Our price is really good on them. And again, we do it because we try to make everything easy for the client and the CPA.
So you're making it so you're eliminating a lot of the rejections that accountants could give their clients. Do you run into that? Do you run into where clients, the CPAs telling their client not to do it?
Yes, it's becoming more recognized in the CPA industry, but for sure in the last 7 years it's improved. But just last week, I had a client that I'm working with in Alaska, and his CPA said to him, "It sounds like a scam." Well, it's not a scam. It's a 30-year-old documented IRS allowance. And unfortunately, some CPAs are not aware of it. The tax code is enormous. CPAs can't know everything. So part of what we have done as a firm is we've created live webinars for CPAs for CPE credit. So they can jump on our webinars once a month. They can learn, they can get credit, and we build trust and understanding. So when a CPA does not know or they come up with that type of thing, we just encourage the client to maybe get a second opinion from another CPA or go to our website or research cost segregation. You know, the client and their CPA have a special relationship. There's a lot of trust. So we try not to undermine the CPA, but we try to educate gently, respectfully, and sometimes we have to tell the client, we respectfully disagree with your CPA. Here are some alternatives to consider in educating yourself.
Well, I think those CPA classes and those webinars that you offer are great because, we have to take those classes. So, you're giving us a subject, a topic that is very helpful to our clients. And I want to thank your company for doing it because I've had some of the people that I work with actually take those classes and they speak highly of them.
We have actually about 400 to 500 CPAs a month that take our classes, just to give you the scope of what we're doing.
And they're free.
And they're free. And they're on webinars, so you can sit at your desk, eat your lunch, listen, and get CPE credit.
We're talking about all the positives of doing this analysis and going forward with this. What's the disadvantage? Why wouldn't I want to do cost segregation?
Well, there's some instances where it may not be of benefit to the client. For example, maybe they have no taxable income, possibly, or they're selling their property within 3 to 4 years and they have to pay recapture on that depreciation. Well, it's not a disadvantage, but there's no advantage. It becomes a wash. The cost of the study doesn't bring any benefit. If we tell them, if you're going to keep the building 4, 5, 6 years or longer, cost segregation is valuable. 3 years or less, it's a wash. So that's one disadvantage. The other thing I would say is to be aware of cost seg firms out there promoting and offering cheap work. You know, all of them, all cost segregation studies are not equal. Make sure you find a firm that's doing engineered based studies, that has a solid reputation, and one that you can rely on, that if you, God forbid, had an audit, that they're not going to turn you down or they're not going to support you. So I would say they're the only disadvantages if I could think of any.
So you tell me you pay for what you get.
Absolutely. It's like anything else, in life. If I'm not, we're competitive. We're very competitively priced, but we're not the cheapest. There's always a guy who can do anything cheaper than you. That's true in life.
Well, let's not do something cheaper. Let's do something less expensive.
Yeah. People want value.
Correct.
They want value.
And like I said, from at the beginning, Robert, your company has given my clients a tremendous value. How often can you do this analysis? I mean, do it one time and you're stuck with that analysis, or can the engineers come in and revisit?
Just once. You only need to do it at the time. If you buy the property this year, you get it done this year. You just need to do it one time in the life of the ownership of your property. If you buy another property, you do it again. If you sell that property to John Brown, now John Brown can do a cost segregation study because he has put, it's just about the cost that you've put out on that property. And so that's when you can do the study just at one time in the life of the property.
What happens if I change the asset? If I put a new roof in, or I put a new HVAC system in?
That's a great question. So in what's called a building improvement or a capitalized improvement, we can then look at that extra capital, and we can also do a cost seg study on that. And of course, it's not going to be a new cost. We will consider you've already done part of the building, so it will be a much smaller fee for adding the capitalized improvement. Plus, there's something called partial asset disposition. So if you improve a building and you remove some of the, say, the drywall, part of the flooring, or part of the roof, there's a value attached to that disposed material. Rather than just put it in the dumpster and waste it, we place a value on that, and we can give you a deduction for the value of that, the depreciable balance of that, and give you a write-off at the same time.
It's a good way of again, increasing the paper cost, because that cost has already been assumed,
Yes.
and lowering your tax burden.
So here's what I would say. There's a lot of information. Our clients and even CPAs don't have to know it all. We come alongside our clients and their CPAs. We work as in tandem with them because this is what we do all day, every day. So we understand the laws, we understand the idiosyncrasies of it. And so we're able to bring all of that sort of consultation to the process, all the details that they are not aware of. We add all of that in so that all our clients and our CPAs have to think about is if they buy, sell, or renovate, give me a call.
Absolutely. Now, why aren't more, again, we asked about accountants, but why aren't the building owners, why aren't the owners of these commercial properties using this strategy?
Well, again, I think it's just a lack of knowledge, lack of understanding. They're not aware of it. Their CPAs may not tell them about it. The CPA is dealing with so many clients. He's dealing with so many things, so many tax laws, and he's not, or she is not always, has everything in mind. If they're a CPA that has a lot of real estate clients, they absolutely think about it right away. But it's basically lack of knowledge, lack of understanding. And so part of what we do is we reach out to building owners who have just bought their properties, and we try to educate them at that point and suggest to them to get one of our proposals, which don't cost them anything, but it educates them. They go away with their CPA, have a little discussion. If they're interested, they get back to us.
So, overcoming the owners, try to do it at the point of sale. You send do you send out flyers? You send it. You have an email. Do you
You
have a,
know, I find the best thing is just to pick up the phone and call them. Honestly, um, I call so many people, cold calls. I just reach out, and once they're on the phone with us and we have a chat, 90% of them are interested. It's amazing because we're really, we don't ask them for any personal information. We're not asking them for any money. We're not asking them for anything. We're just saying to them, take this report, think about it, educate yourself, have a chat with your CPA who you know and trust. Don't trust me, trust your CPA.
what is
And they go away, and many of them, if they're interested, they call me back and say, hey, you know what, Robert? Super interested. Thanks for giving me a call.
what's the best way to get in contact with you?
Best way is to give me a call. I'm
Wh-
on my phone number,
What's your number?
954-614-9544. Give me an email, robert.reed, R-E-A-D, at CSSIservices.com, or jump on our website, CSSIservices.com, and have a look. But email or phone is the best way to get in touch with me. Happy to consult at no cost, happy to answer questions, happy to educate. I love what I do, and I love to bring value to property owners.
Is there a size of a property that makes sense? Because you talked about like a $500,000 property, $1 million property, a $10 million property. Is there a difference?
Well, I would say the smaller the property, the less, there's a scale. So typically a property under 5 million, under 500,000 may not be as advantageous. But for the small guy who has one small Airbnb, the small deduction may mean a lot to him or her. So typically I would say if the property is valued at $500,000 or more, it's absolutely worth looking at a cost segregation study.
What are there certain deadlines that we have to get the us accountants have to get the information in?
Yeah, we go with the tax filing date. So for example, right now we're ramping up for the September 15th extension for 2024 and the October 15th extension, because this is when everybody wants their work done and it's always a mad rush. But it ties in with the tax deadlines, April 15th, September 15th, and October 15th. It takes us about 4 weeks, 3 to 4 weeks to do a study as we approach the deadlines, 2 to 4 weeks in our off season. And once we get the information in good time and we collect the data from the client, do the site visit, it's usually 3 to 4 weeks to get a study completed. We're coming up to the 2024 extensions. If people want studies done, we still have time to do them. I'm super busy right now.
Well, good. I want to keep you busy. So thank you again for coming in today. I think it was a great topic. I know my clients, and I'm sure there's still a lot more that I have to get in touch with, need to use your services. Thank you for everything today, Robert.
Thank you,
Great to
Damiano.
speak with you.
Appreciate it. Yes, sir. Thank you.